How does risk tolerance shape your investment portfolio? Imagine trying to balance on a tightrope. The way you feel about risk determines how wide or narrow your balance beam is. That feeling is called risk tolerance, and it plays a big role in how you build your investment portfolio. For seniors, understanding this is especially important because their investment goals and time frames are different from younger investors. Risk tolerance is how much fluctuation in investment returns you are comfortable with. If you are okay with your investments going up and down, you might have a higher risk tolerance. If you prefer stability and want to avoid big losses, your risk tolerance is lower. Factors like income, savings, and how long you plan to stay invested influence this. For seniors who are nearing or are in retirement, risk tolerance is often lower because they need to protect their savings and generate steady income. When creating an investment portfolio, your risk tolerance guides how you split your money among different assets. For example, seniors with lower risk tolerance usually put more money into safer investments like bonds or government securities. These tend to have less price fluctuation and provide regular income. They might allocate around 60% of their portfolio to stocks, 35% to bonds, and 5% to cash. As they get older, they might shift to even more conservative mixes, like 40% stocks, 50% bonds, and 10% cash. Your risk tolerance also affects how long you can wait to recover from market downturns. Since seniors often have a shorter time to bounce back, they tend to avoid risky investments that could lose a lot of value quickly. This helps protect their savings from sudden drops. Income needs are another factor. Many seniors relying on their investments for income, so they prefer assets that pay dividends or interest regularly. Bonds and dividend-paying stocks become favorites because they provide steady cash flow. Cash reserves are also kept handy for immediate expenses. Diversification is key to managing risk. Spreading investments across different asset classes reduces the chance that one poor-performing investment will hurt the entire portfolio. Seniors often review and rebalance their portfolios periodically to stay aligned with their comfort level and changing needs. Emotional comfort is part of risk tolerance too. Some seniors might hold more cash to avoid the stress of market swings, even if it means earning less. Others might accept some volatility for the chance of higher returns. Practical steps include building a bond ladder with different maturity dates to ensure regular income. Keeping some stocks in early retirement can help combat longevity risk, but many reduce stock holdings as they age. Regular reviews and adjustments keep the portfolio aligned with their risk comfort and financial goals. In the end, risk tolerance shapes a senior's investment plan by balancing income, growth, and safety. It helps create a portfolio that fits their shorter time horizon and emotional comfort, making sure their savings last through retirement while providing peace of mind.